Welcome back. The market's just off of record highs, but the presidential election could turn the tides. A UBS Investor Watch study finds that 8 in 10 investors believe that the election will have an impact on their economic well-being. 1/4 of them are considering pulling out of stocks altogether. Joining us right now is UBS Wealth Management America's Chief Investment Strategist, Mike Ryan, to talk about us. Mike, good to see you. Thanks so much for being here.
Good morning, Maria.
So let's talk about what this study shows. What was your most important takeaway?
Well, there was a couple. First of all, it reminded us once again of what James Carville told us in 1992. It's the economy, stupid. Even though there are concerns about issues of terrorism, healthcare, et cetera, it still comes down to the bread and butter pocketbook issues, which are about economics. So that's the most critical issue in this election.
Yeah, so that relates to policy, we know that Donald Trump says he wants to take the corporate tax, for example, to 15%. We know that Hillary Clinton wants to raise taxes on the highest earners. Does that jibe with what you're seeing in terms of where investors want, who they want to see in the White House? Well,
it's interesting. It does split along partisan lines. When you talk to Democrats, what they say is they'd like to see an increase in the minimum wage. They think that's most important. They think investment in green energy is really important for the future and also for the economy. When you talk to Republicans, you get a very different take. They're talking about balanced budgets. They're talking about tax cuts. So it is a different dynamic depending upon your political issue. Now, what's really interesting, though, Maria, is the one thing that has commonality is where people think there's an opportunity in the economy is with infrastructure and also through research. That is, we believe that we've underinvested in infrastructure and research, and that's the common area where if you have either candidate focus on those issues, this is something that could actually be the one common thread that runs across two parties.
But, Mike, it's Dagan McDowell. Explain, though, if people want infrastructure, that is more spending. So how can you be focused on balancing a budget and fiscal responsibility if you want more spending out of your government?
Well, we know there's always trade-offs. I mean, you know, what the Republicans ask for is the following, and it's always a little bit of a duality to it. You want lower taxes, but you want balanced budgets. You want investments in infrastructure, but you don't want to spend any money on it. So there's always going to be some give and take here. I think what's going to ultimately happen is that at the end of the day, if there is a pathway towards fiscal reform, even if it's a long-term pathway, I think that's acceptable, as long as you see some investments made in the future that could include, again, some thoughtful investments around infrastructure, but also some targeted tax cuts.
Mike, you got to break it down and connect the dots for us. Bottom line here, does the market rally if Trump is the president or sell off? Does the market rally if Hillary is the president or sell off?
You know, Maria, here's a really interesting thing is that when we polled both Democrats, Republicans, as well as independents, their view is that if their candidate wins, they believe the markets will go higher. Now, what's really interesting thing is they both may be right. Because we find is that one of the brilliant aspects of the Founding Fathers was the separation of powers. And we find is that while presidential elections matter, what happens is a split between the congressional and also the executive branch is what matters most. So as long as there's not a concentration of power in one party, what you could see is the market continues to focus on fundamentals and grinds higher.
And do you think investors are with Hillary or Trump?
That's a little hard to say. I think if you look at what they focus on largely is what we do know, and we do know what Hillary would be like in terms of governance, because she's been a senator, she's been Secretary of State. We have less clarity on how Trump would lead. So I think there's a wider dispersion of outcomes. So at least for right now, I think there's a higher comfort level with Hillary, but that doesn't mean that's how it's going to play out after the election.
All right, so what's your recommendation to clients then?
Well, first of all, we're not going to invest around single events like elections. While this is certainly important and we're certainly taking this into consideration, we do think the fundamentals matter more. And right now, this is still what we see. We see an economy that's in a slow, sluggish, but still positive growth path. We see risk assets that, while they certainly rallied, are not overpriced. But most importantly, we see a very constructive policy backdrop led by the Fed and other central banks. Now, if we were to get, in addition to that, some fiscal stimulus, as we talked about through infrastructure spending, that could certainly be a catalyst for better economic growth and better market performance.
All right, we'll leave it there. Mike, thanks so much.